kind of like, I don't understand this, explain it. I don't fucking understand what the fuck you're on about. And then me trying to execute stuff with Bitcoin, create Bitcoin businesses or whatever. And then like on the mayor side of things, it's a bit like everyone's, all these people have come on the pod and said, you're a studio's cook. Looking.
Well, in many ways, it doesn't. I mean, in my view, it doesn't feel forced because it's part of the journey, right? And I do this a lot with my readers and listeners. It's about repetition. And whilst there's a difference in repetition when you're doing analysis and you're learning stuff, and it's technical skill. It's that repetition, like over time. Like me as a listener of your pod, I've followed your journey from the football team into the the battle with the government. All these things. It's all part of that process. Yeah. And as an observer, to me, I've enjoyed it because I listen to you when I'm going for runs or going to the gym or whatever. So my brain's only at 60-70% capacity anyway. So it's just kind of part of the journey.
Well, it becomes like a series.
Yeah, exactly. And like if you go back and I told you this last time you were in Sydney, the series you did with Mt.Gox was actually my orange pilling moment because I got to hear from all these guys back in like 2013 or whenever it was that were fighting tooth and nail to get the coins. And just that side of the story was actually what hooked me. I was like, why on earth are these guys fighting over it? And finally I went down the rabbit hole. I'm like, oh shit, it's actually pretty valuable.
Yeah. That was
perfect segue because they're about to dump on us all.
Yeah, I know. What's the headline? $9 billion worth of sell side pressure. Ooh.
Yeah, but firstly, are they going to sell?
Yeah, I mean, look, Alex Thorne has done some fantastic work. I mean, it's a full-time job to cover this stuff because it's all the legal jargon and all that stuff. But as far as I'm aware, they fought tooth and nail to get the coins back, not the dollars back or the yen. I think they even changed Japanese law to not get the yen back to actually hold the coins. Now, if you're a Bitcoin cash holder, look out below because they're just going to market sell all that shit. But for the Bitcoin, they've had an opportunity to sell their claims for years. So these guys, I mean, they're hodlers. And if you also think about it, right, there's going to be two types of people. People who wanted to exit at some point, and they probably have already. And if not, okay, let them sell. And there's another cohort who, are they just waiting for their Mt.Gox coins and they haven't spent a single dollar on sats? Like, no, I'm not doing anything until my coins come back. Like, these guys have probably been buying, they got sats from yesterday. They're not worried about their sats from Mt.Gox. It's just a bonus.
Do we know how many sold their claims? Like, what percentage?
Alex had some charts. I think it was like 20,000 Bitcoin or so. Something, it's 20, 30,000, something in that ballpark.
Of how many Bitcoin recovered?
140 from memory. I should have checked these numbers. I think it's about 140 odd.
So it's about 20%-ish.
Yeah. And look, assume 10, 20%. Look, there'll be headlines. This stuff's been coming forever. The market's, what I liked about the ETFs when they went live is the market's like, they can't be priced in. No one's priced them in. And the ETFs, everyone's building up to it. They happened 2 weeks later. We're at the exact same price. Hasn't gone anywhere. It's like the market gets very good at pricing this kind of stuff in. So, I think a lot of people are over indexing on the sell side. We'll see what it plays out.
Listen always to what Saylor says about volatility. Volatility is good. I've got this guy.
Good.
I've got this guy. Every time like the Bitcoin price dumps, he's listening to the podcast. He's probably listening to this right now. Don't worry, dude. I'm not going to dox you. But like every single time the price dumps, he sends me an email about why Bitcoin has failed. Bitcoin's failed. People who bought it 72K, they're now like 15% under. And I'm like, do you know, actually, I tell you what I said to him.
Volatility is good. And volatility, this is what people don't get. Bitcoin trades like a commodity and volatility goes up in a bull market. So high volatility, there's two things that people keep getting wrong. They're like, high fees are bad for adoption. It's like, have you seen the fee chart during bull markets? Fee charts are up during adoption. And the other one is that volatility goes up during adoption. And, unlike the equity market, which does this very unnatural, just straight line higher with no volatility, then high volatility sell-offs, Bitcoin's the exact opposite. High volatility repricing to the upside, and then sideways, choppy, boring. We've just been through it, right? Boredom. That's the way the market works.
So he emails me yesterday. He said, "Hi, Peter. The recent Bitcoin price volatility is the reason why Bitcoin is a long way from becoming anything other than a risk asset. People who recently bought at 71K are experiencing a 15% purchasing power loss equal to just about any inflation in the developed world ever over the past few years. Diversification, my friend." And then he goes, "I know you're pissed at me for my past emails, but..." Because
I saw a good meme today that captures this. You know the Woody Harrelson one where he's crying and then the next slide is that he's crying and he's wiping his eyes with the money? That's pretty much it. It's like, we're up 300%. It's like, my 15%. I'm so sad.
Well, I kept emailing back and saying, listen, if you're getting emotional about this, either you're overinvested or you don't understand Bitcoin or both. But like, just forget about it.
Spoonful of cement would be how we'd handle that down here, down under. Spoonful of cement and harden up.
Well, this time I just replied to him, you're right. Bitcoin should only ever go up in a straight line. That's it. Done.
Yeah, I mean, what do people expect, right? You don't go from nothing to world reserve asset without a bit of volatility. And it's part of the process. And like, to me, markets have been a journey because you have to learn to deal with those gut-wrenching drawdowns. And it teaches you life skills that you can't get without living it. You can tell people about it. You can explain it to them. But until they actually live it, it's a different animal. But you come out of it a much more resilient person.
But it changes every cycle, right? I remember the first one. It was like I went from rich to broke, and it was catastrophic and devastating. And then like the second cycle, it was like I went from, it's not like from rich to broke. You went from, okay, life's okay, to, oh fuck, I've got to carry on working. This is annoying. So it went from like catastrophic to annoying. Now I just laugh.
Oh, absolutely. And there's two kind of, I've said this before, but there's two journeys that like these kind of things that the market imparts on you. The first one was back in 2019. We'd had that final sell-off, right? 50% down. My portfolio was like a spreadsheet of 10,000 shitcoins, and they've all gone to absolute zero. And I'm like, okay, I've clearly done something very, very wrong here. And then I finally went down the Bitcoin rabbit hole, went the white paper, all the rest of it. And because I was studying on-chain data back then, I was like, hey, cool, we're going to spend like a year, because 2015, the bottom was this 1 year period under the realized price. I'm like, cool, I'm just going to sit here. I've got my spreadsheet out. I'm an engineer. I'm looking at, oh, look, here's my disposable income. Here's how much coin I'm going to buy. I got 1 year. And then, of course, in April, from 4K to 14. And it was the first time it reminded me, you did not buy enough. And this thing, when it goes, it just goes. So that was my lesson from that cycle.
You never buy enough.
No, you can't. You can't. FTX, it was actually a very different lesson, because always around bottoms that you're really doing some soul searching and going, what the hell am I doing with myself? But when FTX blew up, the awareness that I had was, it wasn't a panic. It was a fuck, that's annoying. But it wasn't because I'd lost coins. It was, I knew that they were in my cold card. I'm like, okay, it's a pain in the ass. The price is down. It's not the best thing to have happened, but I didn't lose anything. Like, and it was that I didn't lose anything. Even though price is down, that was the big lesson I took away from that cycle.
Yeah, I've been selling and spending a bit in this cycle.
No, that's good. It's good. I've actually been I've been trying to be more vocal about this, because there's lots of people who like to never sell. And that, I think that's fine, but it's not, I don't think that's what most people are here for. I think the vast majority of people, and I've been thinking about this quite a lot actually, because when you look at, I mean, you guys would see it, the demographic of who watches it, it's millennials. That's by and large, Bitcoiners are a huge ball of millennials that they're moving into a phase of their life where they need houses, they're raising families, they're moving into their spending time. And Wizard of Oz down here in Australia had this great line at one of the conferences. He goes, what do you actually spend Bitcoin on? And the only correct answer is whatever the fuck you want, because it's your savings and you have to do with it what you want. And I think that is like a really important thing. People should use their savings to improve your life. But most people, they're not going to, like when people say, I'm going to take some chips off the table, you're not selling 100%. Bitcoiners can't sell 100%. Good luck prying it out of their fingers. They might take 5 or 10 and it will make a big change to their life. So I think spending it is actually a really important part of this cycle. And we're getting to that stage when more and more people are going to need to and want to. And I think that's good.
I think this cycle, I will have spent this year about 3% of my Bitcoin.
And that's the idea, right? That in theory, you can continue to peel it off, right? Assuming it keeps going up and it does its thing, you just peel off slowly but surely. And this is the thing, at the end of the day, what would Saifedean do if he's looking at it from like a pure Austrian perspective? It's like, it's giving you the ability to plan for the future. If Bitcoin allows you to plan for your future, then it's done its job. That's its purpose. Its purpose isn't to go to grave with it. Its purpose is to improve your and your kids' life in the future. Another thing I've been thinking on that front is, like, have you heard of like the rule of 3, where generally if you've got a business, like the next generation, they'll turn into an empire and then the next one will piss it against the wall. That's usually how monarchies and things fall. Don't plan too far ahead, right? You're not saving for a dynasty here. Like, save for your immediate lifespan and improve yours and your kids' life. But beyond that, let give your kids a good education. Let them sort that out.
I'll give you a great story. So my son went out to Kenya at the start of the year to work for Gridless for 3 months. It was like a work experience.
That would have been amazing.
Yeah, it was amazing. But a week before he went, he's like, Dad, I think I'm going to sell my car and buy Bitcoin. I was like, you know what? That's a good idea. He's like, I can just get another car when I'm back if I need it. I was like, cool. So he sells this car. We have this thing called We Buy Any Car. They literally will buy any car. Look, you get probably £1,000 to £2,000 less than you should have. But if you look at the price of Bitcoin in January when it sold it and now, it was a great fucking deal. It did well. Anyway, he gets back and he's like, I want to buy a car again. I'm like, cool. He's like, I'm going to sell the Bitcoin to go and buy the car. I was like, you sure you want to do that? He's like, why? I was like, well, what do you think is going to happen with Bitcoin? He said, yeah, okay, fair. I said, what you should do is you've got a little bit of cash in the bank. Use that as your deposit. And then every single month, just peel off the little bit of Bitcoin you need to make your car payments. And that's exactly what he's done. So he's now got a live experiment over the next year to see if that was a good decision. Yep. I think it will be.
But it also teaches you, the financial literacy of Bitcoiners by whether it be lived experience like that or just by the amount of financial shit that people have become aware of, and we're studying it. I mean, I'm self-taught. I'm an engineer. I don't come from a financial background, but I've taught all of it because Bitcoin sent me down that rabbit hole. The financial literacy of Bitcoiners is at a different tier, certainly to the average population. But, the more and more of us that end up in decision-making capacities, and again, we're millennials. They're starting to move into that phase of their life where they're going to have those decision-making roles. It's going to have a long-term impact, I think, because you've got that financial literacy. Something I talk about quite a bit. When you go down the Bitcoin rabbit hole, no one comes with you. It's a very, very lonely journey at the start, especially back in 2018, 2019. And as a result, everyone you meet who's gone down that rabbit hole, behind their eyes, you can see all the proof of work that they've been through where their friends and stuff are telling them, hey, you're wrong, you're crazy, it's insane, right? It's never going to go anywhere. And you're like, but I think you're wrong. And you've got to keep fighting that. So there's like a personal journey that we've all been through that I think is meaningful. And I think long-term, that is the low time preference effect that, is going to change the world.
Well, I'll give you another story on that one, right? So, I own a bar. Our turnover for the last couple of months has been notably down, despite doing everything the same. We're probably 20% down. And I was like, this fucking sucks. And so I go around, I speak to all my friends who've got businesses locally. They're all the same. My friend who owns a restaurant, they're the same. You go to the other bars, you can see like the night life's a bit quiet. So then you go and you chat to people, you say, what's going on? It's like, yeah, interest rates are up. Over time,
because UK's variable rates too, aren't they? Like ours.
You can have fixed rates, but fixed rates a term, and it's usually like a maximum 5 years. But over the last year, more and more people are having to renegotiate their mortgages. I had to do it with mine. Mine's gone up like 20% a month. And so a lot of people are, that's happening. Add to the fact that they're, if you're renting, their rents have gone up, and their petrol prices have gone up, and their shoppings have gone up, but their wages haven't. So there's a squeeze.
And even if they have, it doesn't feel like it has because you get squeezed on the inflation side.
Squeezed. They're getting fucking squeezed, bro. And then you go into the town centre and there are shops closing. There are businesses closing. There are things closing.
Yep.
But I can ride this out because what I've done on all my businesses is over the last few years, when I've got profits, it goes into Bitcoin. And so, during the good time, you make a profit, you put it into Bitcoin. It's the money game that Mt.Gox talks about. You put your cash flow, you generate income and you put that into Bitcoin. And then during these tough times, I'm going to have to go into my Bitcoin a little bit to help support these businesses. But I've got a large runway to do it, whereas everyone else who's got squeezed, where we're wrecking this fucking middle class. I think that's what we spoke about in Australia. This middle class
I think so.
Absolutely wrecked by this. Again, Bitcoin enables you to do that. And this is, by the way, this is where I can go on a bit of a fucking rant, because we're about to get a Labour government whose plan during tough economic times is to raise taxes for everyone, because that's really going to stimulate an economy. But this middle class is now getting absolutely wrecked in every single direction. Yet, if you want to buy Bitcoin in the UK now, they've brought in new rules. You have to be an accredited investor.
Yeah, is that right?
So if you sign up to an exchange, you have to fill in a form. You have to complete.
Because in Australia they brought in like 10K limits, and so you can't send as much to exchanges, and it is getting to that point. So there's a few things I've observed. One is that people don't understand inflation, right?
Nope.
I heard a story the other day about a normie who was basically saying that the best way to fight inflation is to add additional GST or VAT. Let's tax everything another 10% because that's going to stop people spending. It's like, yes, let's make everything more expensive because that's going to make it cheaper. Like you hear those kind of things. And the other one is Jeff Booth. It's not even a thesis. It's just fact that people will vote for more inflation to fix the inflation. And you start seeing these things that, Bitcoin's been talking about for a long time. You're like, there it is. It's playing out in the real world.
There fucking is. Well, this is why it makes me so fucking angry because the inflation has come from government spending, government borrowing, poor, reckless economic policy. Yet any attempt by anyone, especially if you're working class, to try and escape from that, they're not allowing you. Yet you can download on your phone endless gambling apps and you can bet on the next who's going to win the next point in ping pong. £10,000. And then if you get blocked from that, you can download another one. So you can wreck yourself on gambling apps. But if you want to buy Bitcoin, you want to protect yourself, you want to save, no. No. And so then you start thinking, well, the fucking conspiracy theorists, they're right. They're trying to control us.
And then you try explaining any of these things to your friends. You're like, man, this guy's lost his mind. Yeah. It's like, no, I haven't. You guys aren't paying attention. It's just this back and forth. And eventually, you're probably seeing the meme where it's like the metronome. You're like, you got to hear about this thing, Bitcoin. It's going to save the world. Like, there's all these great things. Then you reach the other side. You're like, fuck this. You're on your own.
Well, that's like my pinned tweet. It's like, my friends think I'm Alex Jones.
Yeah, exactly.
And I'm like, I'm always like thinking, I don't know about you. I'm like, how do I frame this in a way that I don't sound completely, absolutely nuts? How do I try and explain, look, this inflation thing, this is the government stealing from you because they're morons. But by the way, there was this guy, nobody knows who he is. He's made this new money that's decentralized that you can have on your phone or a hardware wallet. There's only 21 million. Okay. It's censorship resistant. And that's going to fix everything. It's like, you just sound like a fucking crazy person.
Yeah. No, I've found some success in like taking through the journey of saying, do you agree that since technology, we develop a tractor, suddenly you don't need 50 guys with a scythe. You just need one dude on a tractor. In theory, and I found it very easy to get them on the journey where it's like, things should get cheaper. I'm like, yes. Like, so why does it get more expensive? Like, oh, but the government needs to spend money. It's like, no, they don't necessarily need to spend money, because then you bring up the other point, and it's like, in what projects that the government has ever spun up, imagine they were an enterprise, you'd surely fire everybody because every job they do is a mess. Just like, in what, can you name a single program where they've done a fantastic job and it's truly stellar? There's only one instance that I can truly think of, and that is that the ATO, our tax agency down in Australia, their website is very good. That's it. Everything else that they've done is a complete mess.
HMRC are brilliant at their job.
Oh, yes. No, collecting taxes, like this is the thing. I know that I'm getting wrecked by taxes. I get it. At least they made the interface nice. It's not too hard. It's not too complicated. I can understand it. User experience, they really went to the effort there. No other government department's the same. It looks like the website was built in the early 80s. But if you look at what the ATO has done, they've at least made it easy for you to pay your taxes, which makes all the sense in the world.
Hey, I'm considering the idea of running for mayor. I had a meeting at the council the other day, and I went in there. There were 3 people on reception doing the job of 1 person.
Wow.
3 people.
Yeah.
I was like, why are there 3 people here? If this is my business, there would be 1. And then we go up into the reception, and you've got all these different pamphlets and leaflets and roll banners for all the things they're doing, like their little projects, their charter. I was like, get rid of this shit, get rid of that shit, get rid of that fucking person.
They create jobs to keep the jobs going. And then it's one of those things where, and you'll notice this in business, generally speaking, there's a handful of people who are in there to actually shake things up. Like, hang on a second, this doesn't make sense. Can we rethink this system? And the vast majority of people will just go along with the system because that's what the system is. So there's just you need those people in there. And this is why politics is such an interesting beast, because the people who are in there to do the actual change, they don't have the stomach for it. Like me, sure, I'd love to make a change. Am I going to survive in politics? Not a chance. I don't have the patience for the stagnation and all the arguing and all that. I just don't have the patience for it. So whilst, I probably could do a decent enough job, we're seeing what's going on in Australia with the energy debate. And it's been very interesting because people are on about the coalition, or our equivalent to the Tories. They're in the offside at the moment, and they're essentially saying nuclear. They want to go all nuclear. And the other side, of course, says, no, nuclear is dangerous, expensive, it's going to take forever. And it's like, yeah, true. But at the same time, we've been doing this green thing for a long time. Where is it? Where is it? Like, we've spent a lot of money and a lot of time, and it's like, you're worried about coal-fired power plants. Well, we're still running them because you haven't delivered the other alternative. And you just like, you look at all these components, you're like, you're never going to get anywhere. It's just politics, and they don't like it because the blue team likes it. It's not because they don't like nuclear. It's because the blue team says you shouldn't like nuclear. It's like, oh God, this is just tough.
Yeah, but this is why you're getting the curveballs. This is why Milei won in Argentina, because he's the curveball who said, you're all full of shit.
Yes.
You're all full of shit.
And it's happening all over the world now, which is very interesting. We're seeing the swing back in the other direction.
Yeah, it's why Trump's popular in America. Whatever you think of Trump. It's why Farage is making such big ground in the UK. It's funny because
I thought I saw, is he like number 2? His party's like number 2? Is that a real thing?
Danny, can you have a look at the polling?
Yeah, they're polling second at the moment. And let me pull it up.
Yeah, wow.
And look,
it's turning.
Farage is a controversial figure to some people. He has quite blunt views on immigration. He was one of the leading voices to try and have us removed from, to have us leave the EU.
So this has them coming just behind the Conservatives, but like the trajectory is pretty good for them.
Hold on, that big recent jump is because of Farage coming back, right?
Yeah.
They're probably will overtake Conservatives. The reason, so the interesting thing is it was thought that the Conservatives wouldn't call the election until the last minute they had to, but the thoughts are that the reason they pulled it forward so quickly is they saw the trajectory of reform and they saw their kind of like drop in numbers, and they assumed that they could end up coming third. I think it's still going to happen. I think reform will come second.
Yeah, wow. No, it's starting to turn, right? But whether anything comes of this, and this is the thing, we're in a world, and I said this to my subscribers a little while back, we've left the world of the central banker, in my view. I think somewhere in 2023, mid-2023, we left the world where the central banker, because everyone's hanging on like the next interest rate hike and blah, blah, blah. We're now in the era of the politician. And the crazy thing about that is it's so variable. And I think a lot of people, probably I'd say a lot of Bitcoiners, like, politicians don't get us anywhere, and I agree. But it's also what people talk about because it's going to have very meaningful swings in the direction of things. And I can't remember who I was listening to the other day, but we're not talking about like incremental change here. We're talking about polar opposite change. Depending on which party gets in, the result will be the same. They're going to print a lot of money to do it, but the outcomes will be very, very different. The way the public handles it will be very different. So we are in the era of the politician, not so much the central banker anymore.
Do you know my optimistic thesis on this?
Is this the Marty White pill?
Kinda, a little bit. That my optimistic thesis is over the next few years, we're going to get some fabulously wealthy Bitcoiners who are going to be trying to decide what they need to do in life and realize that they can go into politics with the right intentions. They can go into politics understanding economics better than most politicians, understanding finance better than most politicians. They're able to speak the language of the common man who right now is being fucked in every direction, and they can go in and reverse policy. That's my optimistic thesis.
Well, I mean, we're seeing the early grassroots of that just by the amount of lobbying. If I'm not mistaken, I don't know much about American politics, but they're one of the biggest lobby groups at the very least that's kind of associated with Bitcoin and the crypto industry. So it's to the point now where look at the election. You saw what happened this year within a span of months, right? They've turned on ETFs. There's all sorts of policy changes that have happened, and it's on the political circuit. Now, again, you don't trust politicians as far as you can throw them, but at the same time, this is tell me that back in 2018, my head would have exploded.
Well, look, the Bitcoin conference looks like it might have Trump, Tucker, Massey, a lot of people, Vivek, RFK.
I'm sure there'll be a bunch of people. It'll be like that meme. They'll be lining up to look at all the on-chain analysis when I do my prez, and it'll be on the same time as Trump. And be like, all right, I'll speak to all 5 guys who are hardcore.
But the Dems are really out of touch with this. But Danny, who has it said? You don't win votes by being anti-crypto, but you certainly can gain them by being pro. There's not really I get it on the kind of left, right spectrum on a number of topics. In the US, whether it's abortion or gun control or LGBT, like all of that, it's quite divisive. There isn't like like a huge left anti-crypto and a huge right pro-crypto. There's just a little bit of a swing. By the way, anyone listen, I'm saying crypto because the reality is it's mixed with Bitcoin. But a lot of didn't they run the stats, Danny? Actually, there's actually more Dems that hold Bitcoin than conservatives. I'm pretty sure
I didn't see that. That's interesting.
I'm pretty sure I saw that. It's like we all have money. It doesn't matter whether you're left or right.
Well, I liked the from the resistance money guys. They've got the quote that if you got plucked out of your body and placed into any of the 8 billion people, would you rather Bitcoin exist or not? And noting that you could drop into any authoritarian regime in any horrific part of the world, wouldn't you rather have Bitcoin there? Like in pretty much every instance, it would be better for it to exist than not. Just take it away. Do you really win? Probably not. You're in a better position.
Yeah. Well, I think the Dems are going to have to flip policy anyway on this. It's not worked.
It's happening.
Yeah, it's happening.
Yeah, it's happening. I think they've already started that pivot.
Right. Anyway, it's a nice intro, but we're here to talk on chain. So there was a time recently when Bitcoin hit 60K and we felt rich, and now Bitcoin's at 60K, we feel poor.
Yeah. What is it? It's back at the price it was 3 months ago. Yeah, because I mean, in fact, I started the Substack back in March, and it's essentially just been exploring this consolidation phase. So, like, for all intents and purposes, I've been writing for 2 months, and we're pretty much at the same price. And one of the earliest things I said is, you could probably, like, I expect we're in a period of chop consolidation. You could close your eyes for the next 6 months, and we'll probably be at the same price, but we'll have carted out longs, shorts, and everybody along the way. That's how it's going to play out. By the way, have you doxed your name now? Well, it's James Check, but it's actually Check's a pseudonym as well. And the reason why, right? So when I started in the world of on-chain, everyone's pseudonymous, right? Bitcoiners have always come from this kind of pseudonymy. Now, when I started actually writing and becoming a more public persona, no one knows who James is. I was like, Checkmate is how people actually knew the pseudonym. But then when I was working at Glassnode, all the institutions like, so what's with this pseudonym? Can you explain what's going on? I was like, oh, for fuck's sake. So I was like, okay, just make the name James Check, because then it's super simple. I get both people who know me from where I came from, and the new institutions don't ask too many questions.
All right. Okay. Well, look, I do wonder what the psychology of this is. And I think I know what it is. Because I think what happens is, like, on the upturn, you start thinking, I can afford that house I want. I can afford that car. And then on the way down, you're like, fuck, I can afford it, but I might not be able to afford it.
Oh, yeah. So in terms of, like, structure, and I get this question all the time, and it's a fun day, right? Because we've obviously had a sell-off from wherever we were, 63K down to 58, I think we got down to today. So a bit of blood in the streets. But at the same time, and again, no one, I say this all the time, no one can predict the future. Like, anyone who tells you they know what the future is going to hold is kidding you. It's all about just understanding the mechanics. And the reason I had the title of this these slides is that what Bitcoiners did is, to me, on-chain data is about what we did as investors. What did the Bitcoiners actually do on the network? We are the thing that drives it up, down, left, right, sideways. And I've been talking about this concept of, like, how do we characterize the Bitcoin market? And this is a little grid that I've been using. I mentioned before, Bitcoin is volatile in a bull, but it's also, Bitcoin is a very unique profile. It's volatile during what I call the euphoric phase of the bull, when we get above the all-time high and we're really rip-roaring to the upside. It's volatile during that period, but it's also volatile as you come off the back of it, right? So the end of the bull and the start of the bear are super, super volatile. But they're also, it's depending on whether the market is trending or going in a sideways pattern. And what we've seen recently is we're basically macro view in a very, very stable, stair-stepping, what I call quiet and trending market. It rallies, it goes sideways. It rallies, it goes sideways. Now, if you're sitting there on the 1 hour chart, it's volatile as hell. You're getting chopped around and people don't know what's going on. But on the macro scale, we've gone up and sideways, and that's it. And a lot of people kind of get swamped in the 1 hour chart and they zoom in a little bit too far, and you kind of miss the big picture, which is that we have been going up and then sideways. And even with this sell-off today, we're still in that sideways range. So, and we haven't given back a 20% correction, which is, it's amazing. The fact that we haven't given back that much, and people, it feels like a bear market bottom almost. That's how much fear is in the market.
I don't have any fear in the market, strangely. No. I don't know about you, Danny. This to me feels a bit like that kind of 8 to 12K choppy range pre-sailor.
Mm-hmm. 2019, very 2019 vibes. In terms of, like, the overall sentiment, 2019 is about right.
Yeah, where the range there was about 4K, we were bouncing around in. This feels like a 15K range bouncing.
Mm. Yeah, no, that feels about right. And that's the kind of sentiment, right? And there's a lot of people have been saying, and I get this question all the time. I do a monthly Q&A, and without fail, I've already got slides prepared. I only put the post out today, but I know one of the questions is this the top? It's always I've always got to go through the process of, is this the top? And the answer is like, you don't know, but we can certainly look at the mechanics of what creates a top. And we've had some indicators that have, blown off out the top and said, hey, it looks like, we could have had this enormous sell side and people looking at this at GBTC. Is it clouding the data? Yeah, we had a lot of sell side. But at the same time, the market is chopping around in a 10K range for 3-4 months now. And the other thing I think people mistake is that we've been going up only for 18 months, right? From the FTX bottom all the way through to the 73K top. That takes a lot of energy out of the market. Markets have like this a fuel tank. And sure, on the weekly time frame and the daily time frame, we may want to chop around, but on the monthly scale, you can't go up for 18 months and not have like a 4, 5, 6 month sideways chop. Corrections, there is nothing like a drawdown and an actual correction to reduce the market. That is what gives the market its energy back, because hodlers, our dollars go further. We can buy more sats the lower the price goes. And a lot of people have, how would I describe it? There's an expectation. People expect the market to be at 100K. The market does not work like an ATM. It goes where it wants to go. And a lot of people try to like impose what they think should happen, and rather than just allowing what happens to happen. And I think that's a big turning point.
I'm so guilty of that myself, though. Like in my head, Bitcoin's already worth like hundreds of thousands of dollars. It's just like a matter of time. But it's an absolute foregone conclusion for me in the next year, easy, if not like 6 months.
But I think you've accepted the ability to wait. A lot of people expect, yes, they believe that, but they believe it should be here already. And time, as Bitcoin gets bigger, these things, it just takes longer to get there. And like, again, I think about 2 slides in, Danny, there's a drawdown chart, and it basically shows how little this market has given back. So this is that quiet and trending structure, right? Vertical, sideways, vertical, sideways. It's basically the same pattern. This might actually be the deck I sent you before, but it doesn't matter. This one here, this is just looking at the 90-day price range. Now, this is actually really cool. Very, very simple. The snapshot was actually taken before yesterday, before the sell-off. This is basically looking at the range between the 90-day top and the 90-day bottom, right? How much price has been separated over the last 3 months. The purple line is basically showing that as a percent, and the orange zones are periods where we had a tighter 90-day range. And as you can see, there's not many of them, right? Out of all of Bitcoin's history, very, very, very few instances have we seen Bitcoin go sideways and do nothing for as long as we have during this, right before this sell-off. We're still within that range, so technically this is still valid. But we really went very quiet. And it feels like August 2023, actually. That's the last time we saw this.
I didn't realize you'd sent me an updated one. I'm going to just
V2.
Show the new one.
Yeah, I think it's like slide 4 or 5. There's a drawdown chart, which I'm sure lots of people have seen. But it just shows like since FTX, we've only given back 20.4%. That's the biggest drawdown. And in 2016-17, it's like 30%, 40% is the norm. So people have kind of become desensitized to the fact that we're stair-stepping higher, which is extraordinarily strong price action. And something actually to really think about, if you look at the 2021 cycle, actually Lynn spoke about this back in 2021, after we had all the sell-off and the bear markets in play. She had this cool chart where she basically looked at where we were when Saylor started buying, like August 2020, and where we ended up 2 years later. And you could basically draw a straight line between them. And we kind of chopped all the way to the upside and chopped all the way back to the downside, this one here. But the story was that we essentially went up too fast during 2021. We went from 10K to 64K in like 4 months. And there's a 650,000 Bitcoin bid from GBTC back then. That's what drove that market. Highly unsustainable. The moment that it turned off, we obviously cratered. But in this market, we're doing this stair-stepping pattern, which actually builds support. So when you just teleport from 10K to 60K, there's no support. And we filled that whole thing back in 2022. But if you look at our current market, we're literally rally, pour a new foundation. Rally, pour a new foundation. It's this very, very stable structure. You can kind of feel it the longer you spend in market. You can feel that the market feels stable. Even though it chops around on the hourly chart, it feels like it's just walking higher, which I think is hugely fantastic.
So do you think that kind of sort of stair-stepping dynamic will mean that in the next bear market we'll have a more solid foundation and we won't go like dip as far?
Yes, that's exactly right. If you look at 2021, we just teleported straight up, and we filled the whole thing back in. There was no support for the whole time, and we filled the whole triangle back in 2022. If we kept going higher, I saw a good chart today. Someone just drew like stair stepping all the way to like $1 million, and like this is max pain. People just like getting bored the whole way up. It keeps grinding higher, right? We're up 300%, wiping away the tears with money. But the thing is just climbing higher, and people are eating themselves, right? We're 15% off the all-time high. It's amazing.
Oh my God. Yeah, I mean, like, I just don't give a fuck.
No.
You know, like if we stay down here, cool, more people get in. If we go higher, more people become aware.
Yeah, but I mean, that was my point. It's like I call it chop solidation. Jeff Ross calls it the bull crab. Like these are all kind of sayings for the same thing, which is like, you got to be patient. Markets are a game to learn patience. And if you have an expectation, do not like the markets have a very, very, I don't know, it's almost insidious way of whatever you think is going to happen, it's almost never going to happen. You really have to develop a gut instinct and just allow the tide. I think using like the tide and the waves is a good analogy for markets, because you cannot fight the tide. You will drown swimming against it, and that's what a lot of people do. You have to just allow the tide to do its thing and learn which way it's going. That's a far more beneficial pathway.
Listen, anyone listening, as somebody who's been in Bitcoin for 7 years strong, but 11 years really, like, I've definitely fucked up the first 2 cycles. Just be patient.
Yeah, you got to learn. As I said, it's about learning your own. Like markets are about learning about you. Because you can't, the market just is. It's just information, and you absorb that information. You have to do with it what you will. And that's what on-chain is so amazing for, at least in my perspective, because it's us. And it's about looking at the very, very real human behavior patterns. And actually, this is a cool chart, right? A lot of people have seen MVRV. It's one of the oldest on-chain metrics. The best way to think about what this is.
What does that mean?
Market value, market cap, or price, divided by realized cap, which is the valuing every coin at the price when it last moved.
Okay.
So the other way to think about it, what's the current value of Bitcoin versus what did everyone pay for their coins, right? So within that context, MVRV is an unrealized profit or loss, right? Showing you high values means everyone's very happy, fat and happy, portfolios are green, having a great time. Lower values mean not so much, right? Feeling a bit of the pinch. And if you look at this particular chart, I've just modeled out this quiet and trending phase, right? No, that's remember, this is people's portfolio value. How in the green are they? Just slowly and quietly stair-stepping up towards the all-time high. But notice in the red circles, things get really volatile. Now, whilst the oscillator is volatile, think about what that actually means from a psychological standpoint. People are seeing their portfolio up 200%, down to 100%, up 250%, down 75%. Like they're seeing their portfolio shaking around like crazy because, if people start divesting into other shit, then they start seeing their portfolio just go through all these kind of booms and busts. But this here is actually showing you when people enter that, like, it's the euphoric phase, the market just is, it's unstable, right? Unstable, volatile and trending, bouncing around like crazy, portfolios going up and down. You can only sustain that. I mean, you would know. When you go through a bull market, you can only do it for like 12 months. After that, you're done. You need to go on an island holiday and just get the hell away from the screen.
It has been a little bit different this current cycle because what the ETFs have done. It feels like whilst the ETFs haven't triggered a bull market, what they've just raised the bottom. They've raised the floor price essentially. Yeah,
I like Lynn's, and I've got the quote here. It's like a TradFi API into Bitcoin, and I found it very interesting watching. Yeah, I think it's a really good analogy. And there's been a lot of commentary from people who are like, "Oh, the ETFs are Wall Street corrupting Bitcoin," and "Oh, look, it's just degens trading this thing." It's like, guys, we're talking about 5% of the supply. What is everyone getting so caught up on? And a lot of people said the ETFs have changed the game, and they have. But we've also seen a preview to what the ETFs have done. I would argue 3 times probably in the past. What are ETFs? They're essentially a big pool of money or a big pool of coins where people deposit and then they trade around inside. right? For whatever it is, doesn't matter what it is, that's essentially what the process is. So when have we seen that dynamic before, where a huge vacuum of coins that pulls them into a centralized pot and then they trade around on the inside? Well, in 2016 and 17, it was exchanges. People were depositing their Bitcoin because it was the quote currency to trade shitcoins. That was the first glimpse into what an ETF does. It's a pool where coins go in, they don't really come out, and then they do something on the inside. The next time we saw that was actually in 2019, which is when we came off the bottom, went from 4K to 14. It was actually the plus token Ponzi that was going on over in China. We didn't know about this at the time, but they absorbed like 2% of the Bitcoin in a very short span of time. It's a pool of coins that got sucked in. Now the CCP then took those coins and dumped them onto the market. So that did in fact put the ceiling in, but same concept. The third time was GBTC in 2021. 660,000 Bitcoin going in over the span of 4 months. It's a huge spot bid. Coins go in, they trade around and do stuff on the inside. This is just the fourth instantiation of ETFs, right? We've seen this mechanic at a mechanical level. It's more or less doing the exact same thing.
Interesting.
Yeah. Actually, this is a really cool chart. Go to the next one here. This keeping things in perspective. This is something that when the ETFs went live, I had so many comments coming in saying, you got all your on-chain metrics are busted, which I hear weekly. All your on-chain metrics are busted because it's all GBTC. So I went down the rabbit hole. I'm like, okay, well, let's actually measure this. How big are these ETFs? Because a lot of people will like, let's look at the ETFs. They're the only thing that matters. And they're extrapolating numbers and you're like, look, 100x multipliers and all this bollocks. So what I did is I went and looked at the on-chain world. So the orange and the blue are almost like in physics, equal and opposite forces. The orange is the amount of profit that was taken by investors. The blue is the amount of coins that were sold by long-term holders. These are people, and that includes GBTC. The red is GBTC. And the green are the inflows into the ETFs. So you can see that they are very, very small by comparison. They're about 20 to 30%, depending on when you want to measure it. So 20, 30% is not small. That is a big component of the market. But I would be paying a little bit more attention to the 80%, which is the rest of the hodlers who sold into the rally, right? When the market was going higher, we as the hodlers, we sold our coins to the ETFs because for some people, 73K is life-changing. They've been around since 2013. This is their cycle. This is their station. They're getting off their 10% and they're changing their life.
This is
if
their
Bitcoin
house.
does another 10x run, that'll be people listening to that'll be you. You'll be this orange ball and this blue line. And the other one is that you can see the scale of that inflow. That's because obviously every seller has a buyer. This is also a measurement of capital inflows. And you can see that where we currently are, that second wave just isn't as big, right? It's going to take a long time, on the order of months, for the market to digest what we went through over the last 18 months.
Do you know what? I love people selling for good reason. I hate it when somebody panic sells. When someone sells for good reason, my biggest ever, I always speak from personal perspective. My biggest ever sell is I sold a chunk to buy a house once, right? There was a beautiful house that came up in Bedford. It was perfect for me and my family at the time. I sold that Bitcoin at $27,500, right? We're like over double that at the moment. And you could look at that and go, fuck, if I hadn't have sold that, I could have sold it now and had half my mortgage or whatever. But we've had 2 great years in this house. And I always say to people,
lifestyle chips.
Think of time. Like always think of the scarcity of Bitcoin alongside the scarcity of time. But the big difference, the scarcity of Bitcoin, you know what the scarcity of Bitcoin is. Mm-hmm. You know the issuance rate, right? You don't know the scarcity of time. You know it's finite. Like all of us know it's finite. We all know we're gonna be very, very dead at some point. We don't know when. Like I'd like to think I get to 75, but I might only get to tomorrow. So you kind of got to enjoy yourself. And if you've got life-changing money, sat there in a fucking hardware wallet, enjoy it. Go fucking buy something. Buy a house. Treat your family. Go on holiday. Go on that dream fucking holiday. Spend some fucking.
And I think because I put myself in those shoes. I would say a lot of people came into the 2017 run. That's probably where a lot of the adoption of Bitcoiners came from. 2021 was obviously a big cycle as well, but I think 2017 was the first time that retail heard about it. It wasn't Silk Road era. It was a little bit more mainstream. So if you think about it from that perspective, right, I would probably, I like to look at myself and I go, do I see myself in this data, right? I wasn't the seller here, but if we get the next big wave and we start getting into 6 digits, then there'll be a little bit that I probably would take off the table just out of prudent risk management, right? So you start looking for yourself, and do you see yourself? And there'll be people listening to this who are probably not too dissimilar to myself, who are thinking, it's not now is not my time. 73K is not my time. But I know where my time is. Like, that's interesting, right? There's a price we like, that's starting to get interesting, and it will happen. And it's actually really important because that distribution, this is what a lot of the people who like whales hold all the coins. And we did a study way back that looked at over the last 8-9 years, whales have massively like the actual whales have massively reduced their overall holdings. And you look at this stuff in aggregate, but the idea is remove all the exchanges and that kind of thing. Whales have, by and large, distributed. And that's really important because Bitcoin has to go down the stack and go to smaller and smaller holders, because this is just the nature of the beast. And that's actually very healthy for the system. And whenever you spend your Bitcoin, you're actually bringing capital in, right? Someone's going to buy those coins. They go through the same journey that you did. This is all accretive.
Love this, man. Sell your fucking Bitcoin.
Yeah, at the right time.
Yeah, distribute it.
Yeah,
and for the right thing.
Yeah, this is a crazy stat. So again, to all the folks who are like the ETF is number one, this is a great chart starting at FTX. And all I'm looking at here is assume all these metrics are 0 on the day of FTX. The market cap is up, and it was up over $1 trillion. We've added $964 billion, over $1 trillion at the peak since the FTX bottom. So in 18 months, we've added, I think it was 1.4 trillion we got to as an all-time high market cap. That is a huge number.
Wow.
But in order to get there, the amount of profit that was taken, the amount of coins that moved to a different cost basis was 360 billion. So to me, that's the real capital inflow. That's how much money actually truly flowed into Bitcoin. And of that 360 billion, 15 of it was the ETFs. So in terms of like a magnitude thing, the ETFs are a small proportion. Bitcoin is still, by and large, dominated by the old school Bitcoin world, which is spot exchanges, it's hodlers, it's Bitcoiners. The ETFs, the Wall Street API, the thing that all these TradFi guys like, look, it's been captured. It's like, explain to me how that little red ball down the bottom there has captured Bitcoin. I just don't believe it.
That's interesting because do you have an idea of the sort of size of the buyers that make up that 360 billion? Because just completely anecdotally, it doesn't feel to me like we have a huge retail inflow yet.
Yeah, agreed.
In this market.
Yeah, so this is a great, and actually that drawdown chart we looked at before, I came across some data later on, but when I started with it, I was like, okay, this is very interesting. We've added $1 trillion to our market cap, and we haven't given back 20%. That is interesting. And August 2023 was actually a very, I learned a lot from that sell-off. We went from like 29 to 26, so like overnight, super quiet, and then it just sold off. That particular moment, I was like, and then we went sideways, and there was heaps of sell side. Lots and lots of people panicked, thinking, holy shit, the bear market's back. Lots of PTSD showed up, and yet we just ground sideways, right? Like quite literally sideways, some of those boring price action of all time. And I was looking at this being like, something is just sitting there, not market buying, just allowing coins to come to them. And that is a more sophisticated actor. Sophisticated guys know to let the market come to you. We hodlers, we just hit market buy, right? But a lot of these institutions, they will allow the market to come to them, and they'll just allow people to sell to them. And if you think about this, right? If you are actually worried about whales, first things first, just a pro tip, do not do whale watching. Do not go and look at like balances and be like, look, this whale bought 5,000 Bitcoin. It's like, no, Binance moved a hot wallet to a cold wallet, and you're just very mistaken. So that's the first thing. But second of all, if you want to buy $100 million, $1 billion worth of Bitcoin, you need $1 billion of people to sell to you. And in other words, you actually probably need them to be wrong. You need $1 billion worth of people to sell at the wrong time. If you're these big guys, this is how all markets work, by the way. If you're a very, very big holder and you want to get into a position, sometimes you actually sell to create the downside so that people go, holy shit, bear market, and they sell to you, right? So these big guys, and people call it market manipulation, all this kind of stuff. It's like, no, this is markets. This happens at every scale. There's other guys who are doing the same on the other side of the trade. This is how markets work, right? It's on the smaller time frames, it's warfare. There's just people chopping each other up, and there's wicks going everywhere, and there's people trading and buying and selling. On the bigger time frame, that's where the fundamentals come in, and the market just slowly heads higher because it deserves to head higher. These are the mechanics of it.
It's fascinating. Every time.
Yeah. Yeah, no, it's, I mean, that's what I love about the on-chain data. And this is just to put all the, there was like that Bank of America 118x multiplier floating around. So I actually wrote a piece. I'm like, all right, I got to put this thing to bed. So those charts.
Wait, I don't know anything about that. What is that?
So Bank of America at the Pico top of 2021 released this report. And basically they said, we believe that $93 million will move the Bitcoin price by 2% or 4% or 5%, whatever it is.
Yeah.
And when you work out what that 4% or 5% of the market cap was, it was something like, 50, $60 billion. So you do the math, right? This much in, this much multiplier, and it came out at 118x. So now every man and his dog is going, look, if you put $100 in right now, Mr. Hodler, I want your follow on Twitter, and I want your like. If you put $100 in, it's going to go up $118. So anyway, I went through the process of saying, well, that just doesn't pass the sniff test. So those charts from above, I'm like, let's actually measure buying and selling, big picture. What is the overall story? This is a multiplier that it looks at, and it's quite interesting because it fluctuates between two regimes. High values is at what I call a high multiplier. There's a supply shortage. Every dollar has a 4 to 5x, 6x increment on the price because people are just pushing it higher and higher. In a bear market, it goes very, very low because there's a supply overhang. There's too many coins. There's too many sellers. So you have to just work and work, keep buying, keep buying. This is the hodler experience, right? When you're putting in a floor and you're just buying this thing that keeps going down, you're like, what am I doing with my life? And you just keep buying and buying every single month. And then eventually we move back into the supply shortage. So the hodlers, we exist down there in that red box and we create the conditions in the green box. But the green box is when people start selling, right? Because that's when they're like, hey, 73K is my price. It's my time. I'm going to get off at this station.
So what price are you waiting for?
Well, I mean, we spoke about this last time, right? Once it gets to like 250K, that's where it's like meaningful enough that it will change my life. And again, we're not talking about selling the whole stack, right? If you sell 5, 10%, now you got a deposit for a house. Now you can actually do something with your life and get into this market. And it's the same, right? We were talking before about you've got your savings, you've got your cash. I will be stacking the cash and I'll sell my gold and I'll sell my energy stocks and I'll sell all that shit long before I sell my Bitcoin. The Bitcoin is there in case I need it, right? If I need just that extra money to go and buy the house, you take some off the top.
Danny, do you remember the terms of the bet?
I assume it was 100K sats,
100,000
that's what we
sats.
normally do.
Yeah, I think I said 250K. One of you said 380, I think.
I think I went
250 because I want the lower bound. It was the end of 2025 from memory.
I went 282, I think.
Is it the top, not the price at the end of the 2025?
It's the highest price that we get to by December 2025.
I've got it here. I just haven't got the date. Danny went 282K. Checkmate, you went 250. I went 380.
Yeah.
Are you sticking with it, Checkmate?
Yeah, I mean, look, slow and steady, right? If we get to 250 and we just keep grinding higher, and again, people misconstrue that as a price prediction. I have no idea what the price is going to go. In fact, my price prediction, I think when you go to price predictions, you've got to, anyone who's drawing lines on charts and saying it's going to go here is kidding himself. I prefer to go, you have to go the fundamentals route. And for me, Bitcoin is a superior store of value to gold. And so my immediate question is, okay, well, how many bars of gold are there per Bitcoin? And it's about 10.8 kilos. And that assumes there's no lost coins, by the way. So let's just assume that all coins are totally mobile and Satoshi's coins are floating around, 10.8 kilos of gold. So that's the price target. That's where we're going. That's really the lower bound because you can expect that, if Bitcoin's a superior asset to gold, that's going to take decades, by the way, to get above gold, in my opinion, because central banks are going to buy it, right? Central banks are going to, they're not letting up their current collateral. So I think gold's going to go up as well. So it's going to take time, but that's the target.
You're so bearish.
You're
so bearish.
You're not
10.8. Oh, well, hang on. I'm denominating in an even harder currency than the dollar. That's a harder hurdle rate. Steady on.
You're not bullish enough. CK will have you here.
Yeah, no one's bullish enough for CK, and I respect that. Yeah. This is actually another one. We're talking about who is in the market. So 2023 was a very interesting year because we saw a couple of things that first of all, we had no drawdowns, which is interesting. The second one is that CME is now the biggest futures exchange. Now, there's been a lot of talk about this recently. There's been cash and carry trades and all that kind of stuff going on, which is true. But this has been happening since before that. Since before that cash and carry trade was on, before the ETFs were live, CME has overtaken Binance as the king of futures. And this is a 2023 onwards event. Now, there's another one that options are actually now as big as the futures market. Now, options, for those who don't trade them, I wouldn't recommend it because they're a much more sophisticated instrument. So when you see options now getting to that size, like futures, you go long and short, right? It's a red and a green button. Anyone can do it. Options are a lot harder to get your head around. Fascinating instrument, but most retail are probably not trading options unless they're on Robinhood, and even then, they probably don't know that they're option. They're more like a lottery ticket. But nevertheless, like when we're seeing options and CME, this is a growing up of Bitcoin at an institutional level. And it's been happening long before the ETFs went live, which I think is, to me, this is a changing of market structure.
That's interesting to me because I always assumed CME was a bit irrelevant.
They were.
And so seeing that that's taken over from Binance just shows how like the market's completely shifted.
Absolutely. No, it's a major shift. And if you actually go to slide 13, this is an interesting one about the cash and carry trade. And this is something that I've been paying attention to. By the way, all these slides, whenever you guys release this thing, I'll have these slides so people can actually download it and have a poke around. But a lot of people are talking about the cash and carry trade recently, and it's definitely been happening. And my initial gut check is like, okay, how do I draw this connection and see whether the CME, because my expectation is people are doing the buy ETF, that's the spot side of the trade, and they sell futures on the CME, and they're capturing this premium. So what this chart is looking at is the ETF inflows, only the inflows. I'm getting rid of GBTC because for this analysis, it's noise. So the bars are all the ETF inflows, spot, and the blue is basically looking at the amount that CME open interest went up or down, increased or decreased. And you can see there's a very strong correlation, right? You can go down and actually look at the actual numbers, but basically we're seeing people buy ETF, sell future. We're seeing open interest go up for the futures, and we're seeing inflows to the ETFs. So, and you can also see they're approximately equal in size. And that's why all these ETF inflows we've seen recently, a lot of them are just these guys getting a 10% yield. They're not really buying the spot Bitcoin, but they're getting paid to wait. These smart investors, they know Bitcoin's going to chop around for months. This is just part of the game. So they've been essentially getting paid to wait. If I put on this trade, I'll collect a 10% premium over the course where I'm sitting there. I get paid to do nothing.
Is there any scenario where they lose that trade?
So technically it's for the trader, unless they do something stupid or the exchange blows up. So let's remove like exchanges disappearing, which in the TradFi world is probably less likely. Barring all that kind of stuff, it's, as Raoul Powell would say, basically risk-free, except actually basically risk-free. So that's the trade.
Are you going to believe that?
Exactly, yeah. That's the trade that's going on here. Now, something I wrote about yesterday, which is actually very important. This is risk-free for the trader. Now, when they're buying it, they're buying the ETF, and what does Twitter see? They see ETF inflows. So the narrative and the sentiment improves. People are like, oh, cool, this is great. They don't really see the short future side. That doesn't kind of matter to most people. But if we go the other direction, actually go up one chart, on the unwind of this trade, the trader doesn't care because they're long and short, so they're neutral. But this is the trade volume on the ETFs. When those guys buy the future to close that position, if you're long ETF, short future, you have to go short future and sell the ETF. They're selling that ETF into a very thin book right now. There's not a lot of trade volume. So the futures market is 10 times bigger. It can absorb the exit of that trade. But the ETF and the spot market, much, much smaller. So whilst it's neutral in market impact for the trader, it's not necessarily neutral for us. And I think there's been a bit of unwinding going on of late, which is part of the weakness in the market. The premium got squeezed. Everybody was getting the juice out of this lemon. And essentially there wasn't enough there. People started unwinding and the market just couldn't handle. There wasn't enough demand. And we saw in that previous chart, there hasn't been a second wave of demand yet. So a lot of people are saying, oh, it's the miners. Oh, it's the traders. Oh, it's the short sellers. No, guys. There's not enough demand to absorb it. That's been the number one missing piece that people don't like to talk about.
So is this why you expect some like short-term downward price action before we go higher?
Yeah, so there's a few things. I mean, at the core of my thesis, when you've seen the market go up only for 18 months, a period of 5-6 months of sideways chop makes all the sense in the world. We're in the 4th month of this now. So it wouldn't surprise me if we just continue to chop around for a little bit longer. I think this sell-off here is all part of that process. I think a lot of these guys, these big investors, they know that this is what's going on, so they get paid to wait, right? So they put on these arbitrage trades. I also think there's been a bit of a black hole of liquidity going into NVIDIA. Every man and his dog's buying NVIDIA, so you've got no speculative money. They're all buying AI, which is why crypto is getting killed as well, which is funny, actually. This is a bit of an anecdote. I don't have a great deal of crypto on my Twitter feed anymore. And there's been people who are like, man, everything's down like 90%. I'm like, Bitcoin's at like 65K. What are you talking about? Like, I've just seen none of it. And then you're like, sometimes you get a lens, you're like, God damn, it's a forest fire over there.
Yeah, well, none of it's ever really delivered any value, and I think it felt like it evolved to very fast pump and dump meme coins.
And the funny thing is that they were pumping and dumping on themselves.
Yeah,
it became very PvP, where they're just like, and this is the thing they're all talking about at the moment. It's like, there's too many coins, there's too much supply being unlocked. It's like, well, stop printing tokens, guys. Like that's that's probably if you want to stop inflation, don't vote for more inflation. Just like a very fiat lesson for you all: stop printing tokens. But they can't, because that's the PMF. That's the actual product market fit is printing tokens. And we're a decade in. I've said this in the past. I've used all these protocols in the past, right? I used to use Ethereum back in the day. I don't miss any of it. Like, it didn't improve my life. When I really was very honest about what I used it for, I used it to borrow money to buy more tokens. And if the tokens stopped going up, I exited. And that's all I used it for. I didn't use it for any kind of real life improvement to my life. I didn't need Uniswap to make my life better. And I used it to speculate. And that's okay. It's a casino. But like, that's, in my honest opinion, all that I ever used it for, if I'm very truthful myself.
You'll be able to do it all on Bitcoin soon.
Yeah, I know. Yeah, what do they call it? Bitcoin season 2. Yeah. I've been enjoying the scaling debate is very interesting, and there's things with covenants, and again, I'm not technical enough to fully get my head around it, but understanding what Rusty Russell he's doing with the Great Script Restoration project. There's a whole lot of things which I think it's very interesting. Say what you will about ordinals and inscriptions and layer 2 and season 2 and all this stuff. I have not seen for a long time the amount of people talking and thinking and discussing openly what comes after Taproot. And I feel like that's happening now. And to me, that's very exciting, because like it gives us an opportunity to rethink about, like, where do we want to go with this thing? What does Bitcoin need to survive? I'm a big advocate for the custody side. I think when you think about improving how custody can work, like inheritance planning, because that's meaningful. Again, let's go back to millennials. They're going to need to start thinking about inheritance, because I ran a test with my loved ones. Go and spend one of my coins. I was horrified, mortified, right? You're like, those coins are going absolutely to Nigeria at some point. I do not trust them to make sure they don't end up the wrong place. So I think that tools that allow people to, like insurance, inheritance, all of these things are super, super powerful. And I think it's going to be a big theme moving forward.
That's hilarious.
All right, let's get into some bullish behavior, Checkmate.
Yeah, let's go.
Yeah, so on-chain, right? When it comes to on-chain data, a lot of people have probably the wrong opinion of what it's all about. At the end of the day, it's us, and it's the decisions that we all make, right? So what are you looking for? And this is some good kind of takeaway. Profit and loss drives all of our decisions. I mean, no matter who you are, every single person has a price. And I use this analogy. It's like, imagine that you keep ratcheting up your portfolio. You're up 100%, 200%, 500, 1,000. Just keep turning that number up. What is it, 1 million? 10 million. What's your price? Eventually, someone's going to sell.
What's your price, Danny?
Yeah. What's your price?
I'll take 10 million today. That'll work.
Yeah. Well, the green line's not at 10 million yet, but that's where people start to sell. Statistically speaking, that's when people start to actually unload. And you can see that we entered it on that 73K peak. And what we're basically seeing is that that's when that big orange curve that we saw in the previous chart, people start selling and actually taking chips off the table. People hit their price, right? That's statistically speaking, that's when people find their level. And it can keep going, right? You can see 2021, we just kept going straight through it. But you're in a regime where people are like, that's my number. I'm going to start taking chips off the table. But on the downside, the red zone is actually where people actually step in and buy the dip. And, for me, right, it's $100,000 Australian. That's my current Bitcoin price is 100 grand. I don't like it. but that's the price for me now. I got to get used to it. And I've like slowly acclimatized myself to it. So when we get down to that red zone, that's when we get below 100K. And for me, I'm like, all right, that's value. I've accepted that 50 grand is probably a thing of the past in Australian dollars. I'm probably not going to get that price again. You go below 100, me as a hodler, do I see myself in this data? Yeah, I step in and buy whenever it gets to that red zone. That's essentially where we're getting to the value point within recent history. So what we're looking for is, do investors continue to behave the way you would expect them to during an uptrend? And so far, they have. Now, this particular sell-off is going to be an interesting one because we're now below that cost basis. So we are about to find out whether those people, how many people really have diamond hands, right? If you bought recently, how many of you are actually going to be able to tough it out? And we may well have a bit of a prolonged period below this zone now, right? We're now in 2019 territory where we've got to think about, hey, we could consolidate, we could correct. We don't know if we will, but we're certainly at a point where there's enough investors who are going to be stressed that this is the first big test, in my view, of where Bitcoin's at. Yeah. I mean, this is market regimes, right? The green boxes, very simply, hodlers in an uptrend, buying their cost basis. That's what you want to see. You want to see people buying their cost basis. In the red zone is when people sell the rip, right? They're not buying the dip anymore. They're selling the rip. The psychology down in that red zone is essentially, give me my money back. I hate this Bitcoin thing. I don't want to do this anymore. I don't want to deal with this bear market. I don't like this red candles. And it goes up like, they're down 5% rather than down 50. I'll take it. Get me out of this thing. I've had enough. So they're now taking money out at their cost basis. So you get these regime shifts, right? And you look for when the market switches over from one side to the other. And if you go to the next one, are they actually capitulating? So this is one of my favorite charts. It's looking at all the people who recently bought, right? So people over the last 5 months. Higher values in the green means that they're taking profit, right? Now, my very, very simple advice for people is when they're trying to understand, like, should I be buying at this point in time? Should I be selling at this point in time? Don't buy when everyone else is taking profit, which is what these high green values are telling you, right? When everyone else is selling, it's probably not the best time to be stepping in for your DCA. On the other hand, when people who buy high in the green zone start selling in the red zone, that means they're taking an L, right? People who bought 73K, they hold and they hold and they hold and they finally sell at 57. That's when you step in, right? You want to buy
from the wrecked.
You want to be the contrarian, right? Do the opposite of what the crowd is doing, because that is essentially, right? That is essentially what you want to be. If you're a smart money investor, don't buy when everyone's selling, buy when everyone's panicking, right? Blood in the streets, all that good stuff.
Does that actually work in real time though? Because like if you look like where this turns green at this point,
yep.
If you're waiting for it to turn red again, you're missing the entire move. I don't know how big this move is. Let's say this 10K move or whatever, and you're starting to buy again up here. So is it actually a good idea to not DCA through that time?
Yeah. So look, I mean, the way to think about this stuff, right? It completely depends. It depends how you want to use this stuff. All right. For me, and I'll just describe my process as a hodler, I want to buy as much Bitcoin as possible, right? If I want to DCA, I want to buy as much BTC as possible. I know that markets go up, and I know that I will not get that price again. At some point, this is going to happen. I've become accustomed to it. That's how markets work, how Bitcoin works. That said, I also know that it doesn't go up all the time. In fact, most of the time, Bitcoin doesn't go up. Most of the time, it goes sideways and down, and you've got 6 days out of the cycle that's responsible for half the gains, right? So I want to be there for those 6 days. I do not want to buy when there's a bunch of guys taking fat profits, because if you think about what profit taking is, that's people putting coins that were in their wallet back into the supply, right? The liquid circulating supply. People are always buying and selling. A lot of people are like, hang on, doesn't on-chain lose because you've got all this, trade volume on exchanges? Every single day, billions of dollars of Bitcoin flows in and out, both directions, billions of dollars. And every single one of those coins is carrying a signature. Who held it? How long did they hold it? How much profit did they lock in? Are they taking a fat L? And strangely enough, human beings behave the same way. We're very, very reliable because our brain is 100,000-year-old hardware. It hasn't changed, right? We're dealing with all this modern stimulus. People as a crowd buy the top all the time, and they sell the bottom all the time. And I'm looking for moments when that's exactly happening.
Thank you for your sacrifice.
Thank you for your sacrifice. I mean, that's the thing, right? Markets are a cruel place. Most people don't win. That's just the nature of the beast. And I think on-chain is very powerful because it lets you see what the crowd's doing, right? And if you can kind of think about like X-ray vision, the information may not be perfect. And actually, I like to use my background is geotechnical engineering. So that means I deal with everything to do with the ground, right? So basements, tunnels, mines, anything that's in the ground. Now, the analogy I use is when you're doing a basement, right? I did this one project. It was a train station, 50 by 50 square meter footprint, 30 meter deep hole. And that's 180 million kilograms of material, right? It's a lot of material to move. In order to design that, you got a borehole that's like 50 mil diameter and you got 5 of them. It's like 0.0003% of the material. And you've got to interpolate between what's between those holes and design an entire train station, right? You have very, very incomplete information. But that's okay because we always have to use incomplete information. The idea is to understand what is that information telling you and stitch those pieces together. So to me, what is on-chain data? I'm seeing a very big cross-section with all the noise, all the signal, all the blemishes, and you're trying to dissect it. You're chopping up that data and saying, well, I only care. If I want to see people who are selling at a loss, I don't care about Satoshi. I don't care about people who bought in 2019. I don't care about the guys who bought 6 months ago. I care about guys who bought in the last 3 months. And that's why we look at things like short-term holders. Show me when the most recent buyers, the people who are probably hearing about Bitcoin for the first time, buying their first sats, least experienced. I want to see when they're taking an L. That's when I want to buy. I don't want to buy when the smart money is taking profit. I want to see when the dumb money is and the new money is taking an L.
So many people are going to listen to this podcast. They're going to be like, "Oh my god, I've got the crystal ball," and they're going to fuck
There's
it up.
No crystal ball. There's no crystal ball. It doesn't work that way.
Buy my subscription.
Pay for my newsletter. But no, I mean, like the reality is, right? And I approach this all the time. I have no idea what the future is, and I think that's a really important. Like for me, that's been a really important grounding anchor. Accepting that I don't know. And I look at the markets not so much as like, oh, I need to predict the next price candle. I have no intention of predicting the next price candle. What I want to do is look at the climate and the weather and see where this overall trend of things is going, right? Because again, people can get chopped up on all the daily noise. In my view, it's just not useful for most people. Like the vast majority of us are hodlers. If you're an active trader, go and look at TradingView. Go and look at all the other shitty TA charts that people post and never follow up on, right? That's what that's for. At the end of the day, most people, they want to buy as low as they can. They want to ride the wave. And actually, this is a really key thing. Our whole tagline, Checkonchain, is that you're your Bitcoin personal trainer. And the idea is not about predicting the future. It's about preparing people for what is likely. Because when it happens, right, just envision Bitcoin, you wake up tomorrow, Bitcoin's at 8K. Or you wake up tomorrow, Bitcoin's at 150K. In both of those two events, you're going to be like, holy shit, I need to find out what just happened. Your uncertainty shoots through the roof. And if you can see, well, these are the dynamics that led us into that point. These are the dynamics that have happened post that point. It helps people deal with the uncertainty. And I got this feedback so many times when people look at the videos and like, you actually helped me hodl because overall I understand why the market did what it did. I don't care that it's up or down. Because I'm here for the long term and I'm going to take 5% of my 10% chips off. But essentially, because I know why the market did what it did, that's the useful part. And that's in many ways what I think on-chain is fantastic for. And for me, I do this analysis for me. A lot of other people enjoy it. So that's essentially where this whole thing came from.
The only strategy is to hodl for as long as you can and occasionally peel a little bit off. That's the only one that works.
That's it. And not blow up mentally on the road to get there because, the chopping up and down is rough, right? And doesn't matter how hardened you are, today you have this big sell-off, right? And people are like, holy shit, is it over? It's like, it could be. Let's have a look. Let's try and explore it.
Just don't look at it's like Danny, it's like that don't read the comments, don't look at the charts. Don't look once.
Every time it happens.
Look once every 4 years.
Yeah, once at the comments. Yeah, but every time it happens, like I get the text from my friends being like, "Why has Bitcoin dropped today?" It's like,
so have you received those texts this cycle? Because I haven't. The only person I've received any message from is someone who I know owns it. They're not an active Bitcoiner, but they're like a passive Bitcoiner. That's the only person I've received a message from. I've received no normie text whatsoever.
I've had a few am I too late? Is now a good time to buy? Kind of things. Another thing I talked to Danny about. I wonder if this cycle, like retail, will be dampened because people are just so put off by the price.
Yeah, I think the unit bias is a big one, but I also think the ETFs solve a portion of that.
But that's sophisticated investors or those who buy via ETFs, but plebs and normal people.
Maybe. And now I have absolutely no data to back this up. This is a hunch. But we've seen a lot of people talking about the retail dominance in the ETFs. And I can't help but think how many Bitcoiners have been sitting there with their 401ks just chomping at the bit to get as much of it into Bitcoin as possible. And I can't help but imagine that a lot of that money was just the same hodlers, right? The same hodlers just buying more. I can't help but feel that that's what's going on. That's why it's very sticky.
Fair.
Yeah, that's my gut feel anyway. So, I mean, look, I think this cycle is very interesting because it hasn't really behaved the way that people expected it to. A lot of people anchor to things like, we all-time high before the halving. I don't put any weight to those kind of timing things. In many ways, this cycle is different because it's just been slow, steady, and grinding higher, right? We've been hovering below the previous cycle all-time high, and people are behaving like it's a bear market floor. It's this very, very interesting dynamic where I think a lot of people we're almost still in a disbelief phase. Markets, generally speaking, like NVIDIA is going to go up until everybody's on board. And the amount of anecdotes I've seen over the last 2-3 weeks of people being like, my Uber driver, my grandmother, everybody and their dog is buying this AI thing. And you're like, I've seen that movie many times before. And again, I have no opinion on NVIDIA, but I've seen that movie before and it probably looks a little bit red for a period of time. Bitcoin, everyone's bearish. And market tops, just nobody is bearish at the top. That's just how markets work. Nobody is bearish at the top. Everyone thinks it's a new paradigm. We're going up forever, Laura. And I don't see anyone saying we're going up forever, Laura. I see everyone saying, top's in, it's over, it's finished. It's like, well, it could be, by the way, it could be.
Imagine.
But also that's not typical.
Imagine we've had the top. Some people are going to cry so hard.
It's not happened.
No, and my takeaway there,
my head off.
I think Bitcoiners will do what they have to do. They will do what they have to do to make sure that is not true. I will do my part, right?
Sailor will take us there alone.
Yeah. No, I don't think Bitcoiners will allow it. And, let's face it, the dollars aren't getting any scarcer. So at the end of the day, that's how this plays out.
Love it. Anything else in here that you want to go through, Checkmate?
People want to see whether the cycle top is in, right? This is a great chart. TXMC developed this. If you haven't had TXMC on, guys, you probably should. He's a fantastic analyst. But he invented this chart, which basically looks at the time-weighted volume. So think about hodlers hold coins for a long time, and when they sell them, that's what this thing is describing. Now, you can actually see Mt.Gox on the far right here because they spent very, very old coins. This is why we have to be aware of what's going on in the chain. Those have obviously created a large old coin spend. But the one that we saw into the ETF peak, about 30% of that was GBTC, but not all of it. We saw a lot of people sell that peak. But at the same time, their spending has really backed off. So in many ways, the bulls should have less work to push us higher. However, we haven't gone higher. And that's why we have to be very, very conscious that, in theory, we should be able to go higher much easier because there's less sell side. The fact that we're not is telling us we just don't have that second wave of demand. Now, that doesn't necessarily mean that the top is in. What it does mean is that we're not going to 100K by next Tuesday. It's just not going to happen, right? So resetting your expectations to just be okay with that, I think, is a really important tool. In this cycle, I think a lesson a lot of Bitcoiners are going to learn is just to accept that it's not going to happen on your timeline. And that's okay. It'll happen, but it's not going to happen on the timeline that you want. Market and boredom is a huge way to shake people out.
Do you think that's just a waiting game and it is what it is? Or do you think there'll be a catalyst that then drives it higher again? It'll
be both. So markets usually need a catalyst. And I did a piece the other day where I actually said, let's think about the catalyst here. The first one is that unwind that we were talking about before from the cash and carry trade. That's, what is the number one catalyst? Lower prices. Bitcoin goes down. Eventually, either it's a flash crash and people step in and buy it, like March 2020, which I'm not saying is going to happen, but or you get a bear market floor. the way to go up is to go down quite often. And the market will look for any excuse it can find. Financial media will go out and find like, look, it was Mt.Gox, or look, it was Sailor, or look, it was whatever it is. They'll find some reason. But at the end of the day, we haven't had demand flowing in. So we've been chopping around doing nothing. At the end of the day, people will find any catalyst they want. It could be NVIDIA selling off. It could be all this stuff. At the end of the day, the market went lower because there wasn't enough to push us higher. And it's going down until it finds that marginal buyer, right? And that's the way markets work. Got to go down to go up.
Love it.
Yeah. I think that's it, Danny. That's but yeah, I mean, look, folks will be able to download this deck, but it's about getting X-ray vision, right? Actually, last chart. Go out to that second last one. A lot of people are concerned. This one here. This one here is looking at how much unrealized loss is in the system. So you bought your coin at 70K. It's now at 60. You're holding a $10,000 loss times your coin volume. This here is showing you the percentage of the market cap held in loss. Can you squint hard enough to see
tiny,
it?
Tiny.
I find it so hard. And by the way, this is printed today at 58K. I find it really hard to be too concerned about the market right now when the unrealized loss looks like this. May 2021, which you can see, that started the bear market, that red arrow, that was nasty. May 2021 is, in my opinion, when the bear market started. Even though we all-time high after that, that was when it started. And you can see that shockwave of people, and they're red. That's people who bought recently. They bought at 64K. Stock to flow was telling them it was going to 250K, and it went to 29, and they got rinsed on leverage. That's what started the bear market. I can't see anything like that right now. So to me, yes, we're down. Yes, we're chopping around, but I just can't. I'm sorry. The Bears have got no stones. I can't get too upset about this much unrealized loss. It's pretty benign in my view. It could get worse, but so far it's not.
So the TLDR is stuff will happen.
Of course. No. Here's always hand wavy, it's going to go up, down, and sideways. Yeah.
Bitcoin may go up, it may go down, it may go sideways. Stuff happens. Sit on your hands, stop being a pussy.
Well, the real takeaway is that the Bears have no stones. That's the real takeaway from this whole thing.
Yeah, good. They shouldn't, fuckers.
Yeah.
Checkmate, you're a hero, man. Well, listen, we're going to see you in a few months.
Yeah, October. Chico and Nashville if you're around.
I'll see you in Nashville before then.
Yes. No, the Aussies are getting off the rock.
Damn. All right, man. Well, we will see you next month in Nashville, and then we'll see you at Cheat Code in October.
Absolutely. No, and I think you guys nailed it with the name, right, in terms of Cheat Code. We're talking about at the start. There's been all these, whether it's the Bedford Project, whether it's, Resistance Money, I think is a fantastic project which come out recently. There's all these components where it's like, it is the cheat code. It's getting people to unlock their future, right? And if you give them their future, what they want to do with it, they're going to be able to create stuff that you just haven't been able to think is possible. So I think that's a huge pro of Bitcoin.
All right. Well, hopefully we fill it up with the Aussies and we have a good time in October.
We know what's going on.
Man, we appreciate you. We will see you in Nashville. We'll hang out. And take care.
Looking forward to it, fellas.
Thanks for listening, everybody.
Thanks for having me on.